Hello everyone, you're on with Ocean Trader, and today I wanted to go over a little bit of stock market terminology just so in the forthcoming videos we're all on the same page. I don't want to confuse anybody with any terminology. I'm sure I've dropped terminology that I haven't defined. When I do, just let me know in the comments and I'll be sure to define that for you. I want to make this all as easy to understand as possible, so let's get started. First thing we have is a ticker, which is what we use to identify a publicly traded company. For example, over here on the left, I have Apple, which is AAPL, Amazon, and then Tesla right here. So if you look on my screen, that is where you enter the ticker if you're in charting mode on Thinkorswim. I'll cover that in another video as well. Right here to pull up this Tesla chart. So this is the Tesla chart over a period of whatever the time scale is down here. So that's where you enter a ticker. That's what a ticker is. Next, bullish versus bearish. Bullish market is going up. If you think bulls, think up. Bears, think down. Bearish is down. Wall Street is a constant battle between the bulls and the bears. Bulls are the people who think a stock's going up. Bears are the people who think it's going down. That's all there is to that. A bullish market is one that's trending up. A bearish market is one that's trending down. So just think bull up, bear down. That's why there's that big statue of the bull on Wall Street. All right, let's keep moving. Stop loss. Stop loss is a really important tool in trading. It's the sell order you use to prevent losing a lot of money. It's basically how you help manage your risk. A trailing stop loss is a stop loss that helps you manage your risk, but also moves up. I'll cover it. Moves up and follows the price of the stock at a set trail. I'll just go ahead and do a completely separate video on these because they're so important. But those are the abbreviations. If you see those out there, I use those a lot. Just keep an eye out for that. Next, we have a long position. Going long on the stock means that you are bullish on the stock. Over here, if you look, we have the S&P 500, which is the top 500 performing companies, all the way up through here. Over time, if you're long position, you're in for the long-term gain. You're bullish long-term. So as you can see, it went up and down a lot over the course of time. But since you had the long position, so you were in bullish for the long term, that means that you saw the gains over time. So that's what a long position is a long position just means you think it's going up, you're bullish. You don't necessarily have to hold it for a long period of time. You could hold it for a day. But a long position means it's a positive position that you think the stock's going up. Inversely, we have a short position, which is just the opposite. Short selling or shorting is when you sell high and buy low. How this process works is you sell shares that you don't currently own, that maybe your broker owns or someone else owns, and you say, you know what, I'm going to pay you back for these shares later. So you sell the shares, let's say at $10, the stock price drops down to $8, you buy those shares back at $8, and that $2 gap is your profit. That's beneficial to the other person who you've borrowed the shares from, because if the stock goes up, then you have to pay them more. So if you're short on a stock or you're bearish on a stock, you take a short position, which means you're selling high and buying low. A long position or a bull position, means you're buying low and selling high. So they're just inverses of each other: bear and bull, short and long. Next, we have an investor. An investor is somebody who builds wealth over a period of time, which is as opposed to a trader here. So they would be long on a stock. They'd be bullish over a period of years. So they're looking for these consistent slow gains that continuously gain over a longer period of time. A trader, there's a couple different types. A scalper or an intraday scalper is a trader who's only in for a matter of seconds to a few minutes. So that's just to catch those little pops. They'll usually trade high volume. Day trader is minutes to hours. So you're in again to catch those pops, but they're going to be a little bit longer. Swing trader is 2 days to a couple weeks. So you're trying to swing a stock over the period of a few days to a couple weeks. And a position trader is somebody who will hold a position for couple months to maybe a couple years. Years, you're bordering on investor at that point. So these are just the breakdown of what traders are. You don't really, the ones you're going to hear are if you're intraday, which is you're just trading within the day, or if you're swinging a stock, or you're a swing trader. You don't have to worry too much about this. It won't come up that often. And that's it. That's it for this quick little video. If you have any other questions, just drop them down below in the comments, and happy trading.